Okay, good morning everyone. Welcome once again to our weekly webinar. We have called this the lowdown of the lockdown initially, and then we moved it to lessons from the lockdown. But I suppose in recent weeks, John, we're nearly back into perhaps another lockdown. So I don't know what we're going to call this going forward, but the idea is that we have a 30-minute call. It's sort of high level, fast moving. Idea to just skip over some of the main things that are happening in the world of property. And as you can see on the screen today, we're starting our Around the Regions look, and it's going to be Scotland, and you'll hear from Barry Duddy in a few moments. So for those who happen to be on for the first time, this is a weekly webinar every Thursday, 10 a.m. I'm David Johnson, CEO of Leo Crowdfunding, property crowdfunding platform. And my weekly co-host is Mr. John Corey, and I'll let you introduce yourself, John, and explain what maybe your main business is in property.
So John Corey, as he said, property investor, long time when it comes to buy and hold, US, UK. These days I focus a lot on guiding people on how to raise money through crowdfunding, getting to the age that, as I point to my hair for those that can't see, that I'd rather be the passive angel style investor than the person in the mud shoveling or lifting or all the other stuff. My wife thinks I'm too old for heavy stuff like that, so like fine.
Well, the color of your hair is maybe a little bit of a giveaway on that, so she might have a point, but I know you and I have a bit of fun about our hair colors. We'll leave that for another day.
Yeah, well, mine's natural. I think yours is. So.
It definitely is. We can ask Barry later if his is natural or not. So before we get into Barry, let me just take 1 minute and again set the scene. So over the last number of weeks, we had a couple of webinars that were very heavy on live deals that we were doing. We had a look around the number of deals that we have had funded, and we had really good updates from the various fundraisers. So we were very deal heavy and promotion heavy for a few weeks. So we've deliberately changed tack a little bit, and we're focused on education and information over this last sort of week or so, and then the next couple of weeks. So again, just to remind any who are perhaps new, and it's great to see the numbers of new people joining on a weekly basis. It's really fantastic. And our mission as a crowdfunding platform is very much to help investors learn while they earn how to own property assets by leveraging the power of the crowd. And as part of that education, we took a week and we looked about learning, how to learn about property investment, how to learn the skills you need, access the information you need. We then talked about how to earn from property investment and all the different multiple income streams that you can have, and different strategies within that. And then we looked at how to own property assets. So what's the actual benefit of owning the asset, and some of the things around that. So it was an interesting few weeks, John. We had some really good feedback from people. And what was any key takeaways, or what was the value you felt that we provided when we covered these topics?
So going again on age and sensitivity. So when I started investing in property, you actually might take classes, things, but then you had to, hey Barry, go to mute.
It's come back undelivered to email. Can I just confirm it?
Yeah, there you go. So you had to make this big leap from whatever you studied, books you read, whatever, to signing for a large loan, to committing a lot of capital. And I think it's quite interesting that these days there's a much lower entry point, so people can actually get started. They don't turn into professional students, and they can start owning assets. They can start feeling like an owner. They can start seeing what owners deal with on a much lower entry point. So I think it's quite refreshing that they learn, earn, own, 100 pounds, I'm an owner, rather than it's another class, it's another 1,000 pounds, and like I'm still trying to get started. So
yeah, no, very much so. And there are things that you just have to experience, but if you can learn them through watching others do things, then that obviously is a good strategy as well. Learn from others' experience and mistakes. So as I said, what we're going to do the next week or two is do a Around the Regions, and this is really just to try and get some rather than just always talking about sort of the UK in general and what's happening at a real high level and stuff coming out from the government, is to really deep dive into some of the regions. One, to see what's happening in those regions. And obviously all regions will be affected by some things perhaps equally, but there are also nuances, specific factors in given regions. And we thought it'd be really interesting for the audience just to deep dive into some of the sort of regional factors. So today we are starting with Scotland, and I want to welcome Barry Duddy to the call. Hello, Barry. Good morning. You may come off your mute.
Hey David, hey John. So I hope this newly invested from B&M Stores gaming set would cure my microphone problems, but I suspect it hasn't. And
well, no, it sounds much better, so maybe it has. So
I just look ridiculous, but why is that a thing? So we're going to try and stay off the phones. I'm not used to working from the office again. When I was working from that quiet bedroom of mine, now we're back in a open plan office, lots of noise, deals getting done, all good stuff, but doesn't make for great audio. But yeah, happy to be on and happy to throw my tuppence worth in.
Yeah, no, absolutely fantastic. So just by way of introduction, so you're the managing partner of propertytrader.co.uk, a property investment trading company. You then have a Relentless Consulting, which I know has been going exceptionally well in recent months, helping fast-growing businesses, training, marketing consultancy. And you're also an author. You've joined that list of best-selling Amazon authors, personal best. Was that book property related, or was it more in general?
It was more mindset and that type of stuff, which is probably a subject that interests us all at some level. David, if we're involved in property or we've got some kind of entrepreneurial streak in us, then you'll getting the mind right and having the right approach to things mentally. So that focus there was a couple of years of my life and 200 interviews with people who had been successful in a sort of range of endeavours, business and sports and politics and leadership and such like. So yeah, that was an interesting time. Available in all good bookshops and some very bad bookshops as well. But yeah, that was an interesting journey. And yeah, the property stuff is obviously the primary and main focus now, and as well as trading. Your Property Trader is runs a kind of online auction, so we've seen a lot of traffic through that over the last couple of months. Certainly since we've come back off lockdown, it's been super busy, probably record months, record sales, lots of stuff happening. So it's interesting just to observe sometimes when you're in the thick of it. You don't often step back and understand the narrative of what's going on, but there's clearly moves to be made, and I think there's going to be big changes in the market over the next 3 to 4 months.
Yeah, okay. No, I look forward to sort of deep diving into your take on that. Just elaborate a little bit just on your background and credibility within the property world. So like, how long have you been in the market? Have you always been doing the same strategy, or just let people understand kind of your journey to where you are now?
Yeah, so probably at an amateur level for 15 or 16 years, David, and stumbled into it because like everyone, you think it's just a good way of investing. It's probably a more understandable vehicle than any other vehicle. Property's glued to the face of the ground. It doesn't go anywhere. You own it. You can rent it to someone else. You still own it, unlike maybe other investment vehicles that I couldn't quite wrap my head around. I would say in terms of full-time property, the last 5 years. So we started an auction business, which we sold 2 years ago. That was a traditional auction. And that was sold at the end of 2018, so it's nearly exactly 2 years ago. And I then sort of started building up the marketing side of it again, which has always gone on. So my background has been marketing. And that business still trucks away. We drive leads and revenue into small and growing companies, and we did it for a property business. We disconnected from them, and then we started doing that stuff on our own account. And then lo and behold, you wake up 2 years later, you now own an auction business, which was never the plan. It just grows arms and legs from there. So that's been my background.
Okay. Okay. So what I want to do is get into a little bit about the market. I met you, I'm guessing it must be maybe a year and a half ago, maybe 2 years ago now for the first time. We had a cup of coffee up in Edinburgh, actually it was. And then I attended an event that you ran. And I think John was one of your guest speakers that day. And you had a room of, goodness, 40, 50 sort of property professionals in Glasgow. And I listened to you present and talk about your take on the market. And I think you certainly are one of the go-to people for what's happening on the ground, the reality. And I think you've got the reputation of being a straight talker. You just tell it as it is. So I thought you'd be a really good person. So thank you for joining us today. So market overview in Scotland. What's your current state of the market? How do you find it right now? And then we'll talk about COVID in a minute. So just right now, today, October 2020, what's the current state of the market in your estimation?
Yeah, it's pretty hot. It probably hasn't been this buoyant since 2007, David. That's the short answer. That's our experience. I can't speak as to how others find it. And also we work in a certain part of the market as well. So we're dealing with a lot of investment type properties. That's really our sector. So, I can't speak to the wider market in terms of what houses with shooting and fishing rights and equestrian centres attached to them are doing. We've always kind of trod that lower to middle level that work really well as investments, nice boxes of bricks that everybody understands. From a wider view, we are pretty engaged with estate agents nationally, and I think the sentiment is the same, that up to probably 500,000, the market's really strong right now. People are paying over home report. Home report in Scotland is like survey. You have to have a home report done on your property before you can market it. So you have an independent valuation of the property, and for the first time in a long time, areas other than maybe the west end of Glasgow, which has always been historically strong, we're seeing fairly ordinary bits of stock selling for well over home report. There's a bit of a feeding frenzy right now. That's why I hate giving predictions. So my prediction is it would all fall on its backside as soon as we come off lockdown, that there would be a depression, and I've been completely the opposite has happened. It's been
why do you think that is? Have you any, sorry to cut across you there, have you any idea why you think that is? And maybe John's got a view on that as well. Is there anything you can point to that has led to even someone like yourself who's experienced maybe thinking it might drop and decline, and in fact it's been more buoyant?
Yeah, I think the economies are false on this, David. So pent up demand is one part of it, that people haven't been able to move or shift houses, and that is certainly a part of it. But also there's no pain in the market right now. Furlough has kept people in their jobs. The economy is quite strong. We've had this historic event where we've been kept at home for 3 months, and we've falsely been given this money. And I just think that because of that, there's no pain out there. It's almost life continues as it was, and I'm not convinced that'll be the same. So my thoughts are where we'd come back after lockdown, and the market would be very depressed and scared. And it's exactly the opposite. People just aren't conscious of any bullets coming their way, so they are buying ad infinitum. That's my view, accurate or otherwise.
Yeah. Okay. John, any observations from your
research? It's sort of more of a personal observation. So Barry and I have done a few sessions on various property-related topics during the COVID period, starting in the spring, and it's quite interesting. I haven't spoken to Barry now in maybe a month or so, but he's very upbeat right now about the market, where there were times when it was like, oh my God, the world stopped. This is not going to work. How's this going to? And he had to think about how to pivot what he does business-wise. He's got some staff and an office and all the rest of it. And now we're seeing this sort of mini boom in housing or whatever. So it's very interesting how you could say it's choppy waters, and you have to surf the little mini waves or surf these waves and adapt, because it's very hard to predict. So it's much more about what are you doing to respond.
Yeah. And you've already covered the COVID impact and the thought that the post-COVID would see a depression, but B, even though there's been COVID, because of the furlough payments, it's a very good point you make, Barry, that perhaps the pain that is there has been masked somewhat, but that pain is going to hit at some point.
It's been a big holiday for most people, David. It hasn't, unless it's impacted you or a family member. From a health perspective, I think for most people it's just been a 3 or 4 month jolly. There's no, and there may be no agony for a lot of people who just go back to their jobs as if nothing had happened. But longer term, there's going to be an impact on the economy. And every time you think something will change, something else happens. So Boris jumps up and says that he's going to underwrite deposits for people so that first-time buyers can get on the market. So maybe that gives us another boom into next year. And it's what makes predictions now impossible, is that it's an ever-changing landscape, and that there's a real political will to try and keep the wheels on the cart.
Yeah, that's a good point. So where do you see as any particular growth sectors in Scotland? Is there anything that you'd kind of point to as an individual sector that you can see opportunity in?
Give more predictions. There's, I mean, at a personal level, I'm quite bullish on small commercial stuff. So whenever people start running away from something, I'm kind of inclined to say, well, there has to be a level that works at. So I've been able to secure some small commercial stuff that will work out the back end quite easily for cheap money. I think as well, pre-COVID, the changes that have come in for most buy-to-let landlords throughout the UK, both from a legislative perspective and a taxation perspective, means that amateur landlords, people who've got 1 or 2 properties, are probably throwing in their hand, or it's not what it was, or even landlords who have been in the market since the 90s are probably at an aging stage of their life where they're looking to put their stock on the market. So I think that there is quite a lot of opportunity to pick up pretty good tenanted stock from landlords who no dark agenda, have just simply had their day with it. They don't want to carry on. So we're having a look at that. Landlords that want to sell up, both empty and tenanted stuff, and small end commercial. I don't have any interest in tens of thousands of feet in the middle of the high street. I'm sure it will work for someone at some level at some point, but I just don't know what the bottom of that bucket is. So those are the 2 things, David. Landlords that are selling up because they just had enough, and it's not as lucrative as it once was. And small end commercial, the backside has truly fallen out of that market, and there's some super cheap stuff to be picked up. And I think it might even be a bigger opportunity in England than it is Scotland, because again, there seems to be a will on the government side to allow an easing of planning permissions and such like for commercial to resi.
Yeah, okay.
I've seen something similar, and there's definitely an element of the virus has caused people to like, look, what am I trying to do with my life? And instead of hanging on for another year or 2 before I retire. So the landlords that are on that sort of retirement age bubble are saying, I don't know how this is going to play out. I want to move to somewhere more remote and sunny, and I'm going to just get rid of the portfolio. I was talking to a different person, and they said they have a neighbor down the street who's selling 600 units. So there's some people of a certain age, because he's of that age, and it's like this is a good time to sell because I don't know whether the future looks good or bad. It doesn't matter. My life is limited. I have a certain amount of energy. I want to go somewhere better, and it's time to pull that trigger.
Yeah.
That's a very good point, John, that it's not always, the decision to buy or sell is not always solely based on just what's happening in the market right now. It's based on another whole bunch of factors, individual, age, family situation, things that have happened, right through then to economic factors that may well impact. So Barry, has there been any declining sectors? Is there a sector that you've sort of over the last either couple of years or because of COVID, you felt, what, and I know you mentioned the high street there, but is there any more comments on that or any other declining sectors you'd point to?
Yeah, I'd have to say, from our experience, David, probably not. Everything sells at a certain level, and we do, because we're not buying everything ourselves, we're working with lots of people who are buying stuff, and we're acting as an agent. We're just facilitating the sale. We see lots of transactions, and there isn't a part of the market that doesn't work at the right level. I would say that maybe there is a weariness and maybe even a wariness of real bucket shop stock. So you in Scotland, that there are lots of sub £20,000 flats, which they produce an income, but they come with their own issues and problems, and the type of tenant you'd get in there. So historically, those always sold to someone, because we are more consultative than purely agency. Our advice is usually pay a bit more, get something in the right area where your tenant will be a bit more long term, and there's nothing wrong with low-level one-bed stock. It's just your tenant is more problematic, probably more transient, a bit less reliable. But to answer the question, that sector isn't particularly declining. It's just our advice to people is that there's probably, for a few dollars more, better stuff to get into. And we've got lots of stock up here under £40,000 under stamp duty threshold, which will produce between 8 and 10% return and not cause a great deal of hassle. If you try and go bucket shop cheap, you'll end up with some inherent problems that are baked into those relationships.
Excellent. Okay, so now is where we put you on the spot. Well, you've already indicated your crystal ball a few months ago. It must have been a bit hazy, so it wasn't quite correct. But we'll put you on the spot and then John on the spot. So crystal ball, next quarter, Q4, a bit further.
I've already disqualified myself from this part of it, David. I've been predicting interest rates will go up for about 12 years, so where are we with that? I'll be right eventually, but who knows when. So listen, you would imagine there is I don't believe there's a massive depression. 30% of properties coming. Maybe I don't know enough about the London market, but last time there was a kind of depression in prices here. That's all it was. Nothing dropped to half price. So I think there might be a stiffening in the market as the relative furlough people, and this first-hand knowledge that we have of big employers here that are letting people go. That has a knock-on effect. Even if it's lower level jobs that are going, those people then can't buy houses, which means the second person can't sell. So as traders, we think there'll be a lot more opportunity for us in the next quarter. Whereas over the last 12 months, it's been quite difficult to secure really good deals because, our lowball offers, why would they listen to them? They can just stick them on Rightmove and get, pretty toppy money because the market's quite frothy. So I think there'll be a stiffening of prices, more stock available. Stock will sit on the market for longer. From an investor's perspective, I think the right thing to do is just use a bit of an intelligence when you're getting into things, and probably 2-3 bed houses is the right type of stock for certainly Scottish investors or people interested in investing in Scotland to get involved in. Just less of a yield, but it's still pretty attractive, 7 or 8%, and it comes with a whole lot less problems. There is clearly a governmental move to try and manoeuvre big parts of the buy-to-let industry into the hands of large corporates. It's easier to find, tax, and comply big companies. So you can imagine that buy-to-let's tougher than it was, and it'll probably become tougher moving forward. And in Scotland, we've got other changes afoot as well. So you can play this video back to me, David, in about 3 months to show exactly how wrong I was, that everything I said has been contradicted. But that's where I see it. And over the next quarter, certainly the first quarter of next year, I think there'll be massive opportunities to buy really decent stuff, both to potentially flip on and certainly to hold into the long term.
Yeah, no, that's interesting. Before I bring John in for comments onto the crystal ball, again, it's interesting what you say. I know you sort of say it in jest, but play back in 3 months, but that actually makes a very, very valid point. I think whether you're a property professional perceived or an amateur, to think you can read a newspaper article or attend a webinar by someone who's got a huge track record and they're going to have all the answers for you in terms of what you should do in your property strategy, it just isn't there, because there's so many different factors, and even people with huge experience, as happens in every walk of the economy and business life, just because you've walked the journey a long time and are an expert doesn't mean you always get it right or can get it right, because there's so many different factors. So I know, John, that's something you feel strongly about, John, not listening to necessary newspaper articles and so-called experts.
I think you should read all that so you know what other people are reading, and particularly if you're dealing with members of the public when you're buying or selling, that could heavily influence how they think. And when people believe stuff, it causes things to happen, like religion and other topics, that if people believe things, they then take action based on their beliefs, and that's what drives how they behave. The problem with crystal ball is none of us are good at predicting the future. If we were, we wouldn't be sitting here talking about property investing. We would be selling our predictions. And what I'd like people to focus on is, rather than try to predict the future, just stress test your business ideas, stress test your portfolio or your strategy. Say, well, if the following things happen, what would that do to my business? If these things happen, what would do to that my business? Rather than predict it, then look at, well, I'm well positioned, so no matter what happens, or I know what I have to do if certain things happen, because I've made a note of when I see this, then I have to adjust. So it's not about trying to accurately predict, it's trying to be prepared and recognizing that no plan is going to survive first contact with the enemy.
Yeah. Okay. Brilliant. Okay. So the last one then before we wrap up then, in terms of strategy, Barry, and I think you used a phrase the first day I met you in Edinburgh, whatever it was, 2 years ago, about, I think in those days you were really focusing on below market value property, and you would just go in. I think the term you used was you would literally just collect the post, put it in a bag, and put the property back on the market. So not even cut the grass, not even paint the front door. It was just lift the post, put it in the market. So what's your kind of strategy in that market, and then just in general as a business?
Yeah, in an ideal world, David, that would still be the case. And when we get those, we'll certainly action them. So I don't particularly love the refurb process or anything like that. So I'd rather just buy it at the right price and leave a drink in it for the next person. We make a profit, and so does the person that buys it from us. In a frothy market, that's a more difficult trick to pull off. So we have got embroiled in refurbs and such like. But the strategy, again, at a personal level, and this is probably an age thing, is that we can use our ability to find below market stock to trade. We use those profits then to buy stuff cash. I'm not looking to burden myself with debt. So that might not be the wisest play for a lot of investors, because they want to leverage themselves. I'm facing the other way now. I just want to use the trading profits to buy stuff outright for cash, hold it into the long term. But yeah, if I can get involved in stuff where we just find it, pick up the mail, put the mail in the blue bin, and just put the property back out, then happy day. And if we need to put a bit of sweat equity into it, then we'll do that. And the drive behind that is we want to generate cash and profits so that we can go and buy stuff and hang on to that longer term.
Brilliant. So okay. That's absolutely fantastic. Thank you for that. And I actually owe you an apology because I looked hard on the internet for a house built with £20 Scottish notes, but I couldn't find one. So I had to just stick with the English £20 note. So I hope you weren't too offended by that.
They're on the Scottish mattresses. That's where they are. You don't actually get to see them live.
So there's a business opportunity for someone to fold a few notes and take a photo and then put it up for sale.
Yeah, exactly. I'm the buyer of that.
Very good. So Barry, I really appreciate you coming on. You have a wealth of knowledge, saying one of the go-to people in Scotland, and I really, really appreciate that. So thanks for taking the time. And if you want to sign one of your books and send it my way, I've got lots of books, as you can see, many of them signed by famous people.
I too could feature on the David Johnston bookshelf.
Yeah, I've one there by Jose Mourinho signed there, so I can put you right beside Jose Mourinho if you want. But yeah, that would be good. And encourage people to go and get Barry's book and obviously get his input on the book he wrote, which is obviously very, very good. So Barry, thank you very much for that.
That was a pretty subtle request for a free book. That might be your Scottish side coming out, David.
So I'm actually over in Belfast tomorrow, Friday, for exactly 1 hour. I'm picking up my niece and sailing her back across the water. She's only 11 years old. She can't travel.
You should stay longer. Enjoy the lights of Belfast.
I know.
If I know
That's
that,
not allowed right now, right?
There's lights on nowhere now, David, after 6 o'clock, so
Well-
I'm not missing anything.
Yeah, well, at the minute, there's not even cafes open in Northern Ireland. We are on a semi-lockdown, so there's not even a cafe option. So listen. Speaking of Northern Ireland, so next week we are delighted to have 2 people on who are both very well known in the Northern Ireland property market, Laura Kearns and Tanya McKeegan, and they're going to join us and talk about the Northern Ireland market. They come from slightly different backgrounds, so they'll have a different view on the market. Even though they do work together on some things. So this is going to be very interesting. Looking forward to talk about my own market for a change, rather than London and Northeast and Scotland and Wales. We're going to talk about the centre of the universe, and that's Northern Ireland. So we look forward to that next week, same time, 10 a.m. next Thursday. And again, for anyone who wants to reach out to me or John, right? Go ahead, John.
Nothing. I was just looking forward to next week, hearing about the market in Northern Ireland.
Yeah, it'll be great. So yeah, so whoever wants to get in touch with John or I, you can. We'll do a 20-minute call with you. If you're interested in some consultancy, we can arrange that as well and discuss that with you. And that is us for this week. So hope everyone has a successful week. Again, big thank you to Barry for joining us, and to John once again for co-hosting. And this will be on YouTube. So in about an hour's time, you can go on our YouTube channel and you can rewatch this and get some of those tips from Barry. Particularly if you're dealing in Scotland, or if you know someone who's dealing in Scotland, then send them a link to this recording, and this will be a very valuable update on what's happening. So again, thanks very much, Barry, for joining us. Appreciate that.
Thanks, folks.
All right, and we'll say goodbye to everyone. And I'll say, above all, in the current climate, make sure you stay safe. All the best. Bye-bye.